Good morning, everyone. Welcome back to the Schwab YouTube coaching channel for our Thursday edition of Trader Talk. In today's market, I am your host, Kevin Horner. Thanks for being here this morning, everybody, as I run solo with all of you. That means it's an opportunity to get your questions presented, of course, as usual. That means we've got a fellow coach in the chat today. I am joined by my friend and fellow coach, Barb Armstrong, today. Please say hey to Barb. She'll be able to get to comments and questions that I am unable to today. But needless to say, I do want to hear from you, so please feel free to post in there for the duration of our show. I see a lot of familiar names in here: Gary and Kelly and Kevin and Ricebird and Janelle, Silas and Will. My goodness, lots of familiar names in here. I'm so glad to have you all here today as we take a look at what the market is really up to. It might be a decision day for some of you out there, given time frames, obviously, but the market finally had a pretty healthy drop yesterday, and we'll see to what extent we've done some technical damage, so to speak. So make sure you're following Barb and me on X, Barb Armstrong CS, Kevin Horner CS, putting a lot of charts out there for you the last couple of weeks. Hopefully those have been intriguing, or at least maybe give you something to add to some watch lists here and there. And don't forget, make sure you're subscribed to the channel, of course, as well. So with that, let's jump to our disclosures and we'll dive right on into everything, everyone. So first of all, remember that our discussion here is exclusively informational and educational. We do not make recommendations. We do not make endorsements for any specific approach to trading the market. We do, however, discuss technical analysis here. As we do that, remember, we're just talking about strategies and concepts traders might choose to employ. As they do that, though, we want to remind you not to incorporate only technical analysis in your decision making. What we mean by that is we think you can incorporate many factors as you're making your decisions, but not to rely only on the sole information you get out of technical analysis. Now, in terms of our class today, as we often do, is our standard agenda. So we will work through the top-down approach. We're going to start with the S&P 500, noting the significant move we made there yesterday. We'll get into the NASDAQ, and we'll look at the Russell. We'll look at semis, probably transports as well. Going to need to also move into some other tertiary areas of the market, probably looking at some futures symbology. But remember, we're not talking futures trading here in this class, so anything we do in the way of futures is really just for an understanding of price action more than anything else, not from example trade situations. So, but we, as always, plenty to get to, and the fact that I am here solo will afford us a bit more of that opportunity to hit up a few more symbols than we otherwise might. So we'll start, as we always do, with the S&P 500, and I'm going to zoom us in to the space that we've really been paying the most attention to. And yesterday we had that open that was okay, but as I talked with you all yesterday, we discussed the importance of holding on to the low. And when we traded through the low of Tuesday, we got an extended bit of selling. Let's take a look at how this appeared on a 5-minute bar. So here we have Wednesday's price action, and we had our open up here, right? But we sold down, and then we tried to maintain. So we basically came in to this space here, and as soon as we broke down from here, this became resistance. Look at this. So we had the low from Tuesday, and I'm going to zoom into that now. And the low from Tuesday, once we violated it, it became resistance. We banged our head on it right here. We were through the 20-period exponential moving average, a commonly incorporated trend following indicator on a shorter term chart. And as you see, we were above it for those 2 periods and then back below. Above it for 2 periods, back below. Above it for 2, back below. This was a pretty decent run against that 20-period exponential moving average as resistance intraday yesterday. Now, today's open looks like we got that CPI number to come through a little cooler, led to a nice open for us following the selling. Well, not just a nice open, but a strong one in the sense that we opened well above the pivot incorporating yesterday's high, low, and close valuations, and opened above essentially at R1. I mean, we've had a little dabble there, but we know a ledge we want to try and hold today is going to be in the SPX right at today's intraday low, the opening low. So we'll see if that holds, because if it does, we run the opportunity of a trend day the other direction. So instead of following the trend lower and utilizing the exponential 20 period moving average as resistance, the hope would be that we could get this thing in gear and start working against the 20 period EMA as support. So that would be a nice development. So let's peek back at our daily chart. I'm going to pull off those white lines that I just drew in there because they're kind of messing up my view of things here. So I'm just going to lift these off. So we are back above the 50-day. So one day below the 50 on a close might not be problematic for many traders, right? One day below, we could certainly get back on trend. As you can see, when we were back here trying to figure things out in the middle of November, we were below the 50-day for about, let's see, maybe a week and a half, almost 2 weeks before we recaptured it. And, the more time we spend below the 50-day, the less comfortable we become, and the greater the opportunity to revisit prior lows comes into play. So we do want to at least acknowledge that we've got support beneath us in that vicinity of what we would call about 65.40 or so, 65.40 to 65.50. And that's important because our odds of meeting that level increase pretty highly, actually, as it turns out, everyone, if we do trade under the low we made yesterday. So that becomes another short-term area of importance, right? Now, if we can keep above the 50-day, things will be fine. If we can move back above the high of yesterday, even better. Why is above the high of yesterday the better view? Well, we made what we hope is a short-term low yesterday. And if yesterday was our short-term low, well, then the first thing we can do to try and get back into gear, the first thing we're going to want to see is a close above the high of our low day. And so I'm just going to peg that at yesterday's high. Yesterday's high was 68.12. So I might put that line in here, make absolutely certain that I'm at that level, 68.12. There we go. And so if nothing else, everyone, just give yourself the knowledge that there's a decent opportunity for us to do that, to trade upward through that 68.12. Hopefully that's what occurs, because that'll look like a successful 50-day moving average test. But again, remember, big difference between moving through it on an intraday basis and moving through it on a closing basis. We would ideally like to see this as a big, beautiful green candle filled in up to the top and trading above at the close 68.12. That's what we're looking for. Okay. Doesn't mean it's what we're going to get, because the opportunity absolutely exists that we could trade under the low of yesterday and then things get more bearish. But that's what we're looking for if we want to be bullish here in the near run. Now, we're getting some leadership back into NASDAQ today. We're up 1.25%. Now, that candle is currently red because we are lower than our open here at the moment. Good chance that today's price action is an inside day, a Harami, fully encompassed within yesterday's candle, because it was a pretty healthy candle day. As you can see, our high yesterday, 25,193. Our low 24,647. So, we had a pretty healthy range there, somewhere in the neighborhood of 500 plus points on the NDX. And so we are day 1, 2, 3, day 4 below the confluence of the 50 and the 20. We would like to see the NASDAQ get itself going here. Same thing on the intra-period chart, that 5-minute bar going back into Wednesday, where we were below the 20-minute, the 20-period exponential moving average, and we've stayed below it all day. And so on some of these days, you're going to get no real clarity from the 20-period exponential moving average, and then other days, you're going to get extreme clarity, and it's going to be helpful for you. But one, you have to have it on there to know, I guess. And certain days when we start to see the action we're looking for, potentially we can get this to flip and become our support trend line for the short-term basis today. So the NASDAQ rallying nicely here, up a little more. We're going to see why when we scoot into the semis in just a second, but let's step into the Russell and small caps, see what happened here. Now, it looks like yesterday's low coinciding with the 20-day moving average to this point has been utilized bullishly. So let's zoom in there once more and see that the horizontal level was deviated on a close, but we held the trend line with the orange level there, the 20-period standard moving average or simple moving average, just shy of 24.93 it looks like. So that becomes an area of short-run trend support, being that we had been, bullish above the 20 in through here, right, until we started to break down in October, late October. And then we've been below it until we just recaptured it here the end of November. So now we are looking at this being above this moving average, the 20-day moving average now for 3 weeks. And if nothing else, traders who are working the Russell in this window, this 2 to 6 week period that many traders consider for a so-called swing trade, this may offer opportunity for bullishness. Reason being, we've confirmed potential support at the 20, and from a trend standpoint, traders might look to exit the position under the low we created yesterday, or traders with a longer window of time or maybe a deeper tolerance for risk may do so on a break of the 50-day instead. Those levels aren't too far apart, as you can see. They're only about 25 points away from each other. So when you're doing the math on this, determining which level is the one that matters to you, that's the calculation we really need to do. How many dollars do I have invested? And am I comfortable that if it broke the 20, I could ride it down to the 50 for a support test? Do I think that the 50-day could hold if we violated the 20-day? These are questions traders need to ask themselves. There's certainly a bit of confluence here at the 50-day as well. We had this former resistance from which we pulled back pretty good, right? And it happens to line up almost perfectly with that 50-day moving average. And, perfect or not with the lineup doesn't mean squat, unfortunately, but it certainly gives us a way to manage risk. So while I don't know what's coming next in the Russell 2000, what I do know is that traders have 2 levels that they can look to. Hey, if we break down under white line 1 around 2,500, some would lighten up. If you break under the white line 2, they would lighten up even more. And potentially, if you're a short-term trader who bought on the breakout from here, breaking this and moving to the upside, you bought it. If you are that trader, chances are you don't want to be involved in this trade again under 24.65, right? Because now the potential exists that a higher likelihood is that we go back and visit that 2,300. And so some of you aren't going to want to stick around for that 165 potential move, 165 point potential move to the next layer of possible support. So again, remind yourselves, technical analysis doesn't tell you what's going to happen next, but it does tell you how you can address your individual positions so that you are comfortable to manage the next layer if we continue selling, right? That's the idea behind technicals. It's all about setting our risk and being comfortable with the positions we maintain and the dollars that we've devoted to our trades. All right, so the Russell is moving upward, and we notice that the 10-year is further retreating. So this should not be a surprise. Probably could have thrown a question at the group here, right, everyone? I could have said, hey, what's your expectation without even looking at the watch list over here? What would be your expectation if the Russell is rallying? What do we expect from yields? Probably lower yields. And sure enough, pulling back in the yield picture right now. Now, it is notable that we have broken that downtrend. So all of this action is actually a little bit of a heads up. We still have to monitor it. What we want to see is the continued move lower in yields. The more we continue to have confidence in the U.S. market, you're going to see more buying of U.S. Treasuries, and buying of U.S. Treasuries leads to the reduction or the lowering in our yields. That would be a win for the Russell and small caps. Okay, so that's what we would like to see as it relates to the yield and small caps specifically. Obviously, remains to be seen as to whether we will get exactly that. And then the big mover today is the semiconductors, which were the big ugly candle yesterday. So yesterday's candle was substantial, as you can see. We did come down and had basically a day where our high yesterday didn't make it to the high of the day before. So our Tuesday high did not get exceeded with Wednesday's action. In fact, we kind of hit our head on that orange 20-day moving average, and then we went lower. And it was an ugly bit of a move. Now, from the fact that we closed at lows, we opened way high, so that candle doesn't look inspiring just because it's not green at this moment. It's pretty early in the day, so we're not going to overthink it just yet. But let's peek in on our intra period, and we'll see that we did gap R1. So perhaps R1 becomes our equilibrium price, the pivot for the day in the SOX index. So if that is in fact the case, everyone, we are, as bulls, if we are bullish, we want to see the R1 level provide support for the day. And the fact that it would be above that green line, where is that green line relative to everything? Okay, so it was resistance back here, and so it could be potentially support for us now. We want to see this hold. Obviously, the first 15 minutes of the session looks okay. But, when we had yesterday was a healthy 4% sell-off nearly, and we're going to need a good rally today to eliminate that if we are going to get right back on path with the semis. So it is a good bounce initially. Know the levels, that you want to adhere to. As an example, on that short-term one where we're dabbling right now, if you bought up yesterday feeling like, oh, you know what, I expect a bounce tomorrow, maybe that CPI is coming in cooler and you got what you expected, you bought up the semis back there at 6,700 and now we're at nearly 69, a move like that could be substantially appropriate for a trader to just say, all right, it made the move I was looking for. I'm going to go ahead and start mitigating my risk. And they might be doing so as we speak, because we are moving downward through that R1. So let's see how that plays over the coming 20, 30 minutes here as we look toward the conclusion of this particular show. Now let's move into our transports, seeing that the transports are holding up here. We have talked a bit about the transports of late because of the recent price action moving into new highs. This is pretty intriguing though, isn't it? Look at that, the 20-period moving average in orange, a little too slow to capture support of what's gone on here for the last about 4 weeks. In fact, I probably should change this from a 20, 50, and 200. Let's just see where the 10-day resides. Okay, so this looks a little more intriguing for a lot of traders here, right? If I zoom in, we've now been above the 10-day since the 24th, and if you've been using the 10-day to manage risk, you've not had a reason to reduce position size just yet, right? So is it setting us up for continuation? Potentially. Now, if you're a trader who's waiting on a breakout to be a buyer, you haven't gotten it yet, right? We would suggest that what you need to do is trade through the downtrend line. Other traders would say, you know what, I like it, but I'd like to be a buyer down there with the recent lows we've made. And so some traders might look down there and say that would be a better entrance because if nothing else, it's shorter term and nearer support. So a nearer entrance at support or an entrance at a level closer to support means less risk because they would choose to move on very quickly if that level is not maintained. So as always, the important factor is to have your plan, know what you're going to do if things change, right? And while this has been working for 3 to 4 weeks, there will come a time when it's not. And so traders that are watching this, if you're a short-term trader and you're watching the 10-day, to this point, you've not had a reason to reduce the size of your position, to take profits, etc. But when things change, that's when it's incumbent on us traders to make those steps, those decisions, right? Be prepared to take profits, reduce risk, build cash, etc. And have that laid out for yourself. That again is going to be the decision process that'll be easiest for most of us traders, I would say. It's just kind of having the idea, can this occur? Of course it can. And if it does, here's what I'm going to do. Just give yourself the roadmap, or the playbook, as I like to call it. Now, I do have my Dow Jones, Dow Industrials, and Dow Transports look. We could take a peek at here just for confirmation detail. Notice again, the industrials moving to all-time highs. Transports are pausing as we speak, but have improved dramatically. So again, the longer haul view here could very well be bullish in terms of confirmation from the Dow theory perspective. We'll see if that does in fact continue. A lot of it has to do with the continuation opportunity in the daily chart that we just looked at. Can we move through that white line on a continuation of that recent 2-3 week move, 3-4 week move rather, that we've seen in transport? So they've done very, very well. And I thought, as a reminder, Brent and I talked a little bit yesterday about what is it within transports that's doing the heavy lifting. Believe it or not, it's actually the planes, everybody. So just take a look here at airfare or airline total stock market. If I put I don't even need to put all the other moving averages in there, because it seems like the only one that matters is the 10. Again, look at this. We were above the 10 from the 24th and have held it now since. And Brent called this out just yesterday, studying the idea that maybe this was tied to the move lower in oil. In fact, we've noted that oil got as low as it's been in the last year, just recently. In fact, just this week. Look at that. So we did come down and test this $54 a barrel, $55 a barrel, excuse me, the lowest level we had seen since April and May collectively. And of course, in April, the question was, how are tariffs going to hurt the economy? And if the economy is hurt, are we going to need as much oil? And this was all a question about whether we needed the supply we had. And so now we have pushed ourselves down to this ledge. It's a little bit of a difference in price action, though, isn't it? As we have basically stayed between now for 3 days, 57 and 55, whereas back here, we had huge tails. So we had a ton of volatility back then in April and May when we got to this 55 level, and we bounced very quickly. So this is the fact that we have stuck here now for 2 days, 3 days in this 55, 57 range is a little bit interesting, and it is a little bit different. Notice my 10-day on this one is insufficient from a standpoint of risk. If you're looking at management of risk, pay attention to the 50-day perhaps, just simply because we have been below it for a while, and we have tried to get above it a number of times, haven't we? So each of these are instances of failures at the 50-day. So remember, the trend that's in place is more likely to continue than to break. Put the reversal opportunity, force the position you're watching to make the reversal. Don't anticipate reversals. You can start to think about reversals through things like, am I getting an RSI divergence, for example? But not always. I mean, divergences are potentially opportunities, but they're not immediate or causal. You look at a divergence and say, oh, well, that is definitive, right? That's just not the way divergences tend to work. They can play out favorably as potential reversal signals, but the way to think about it in my eyes is that if the divergence, for example, is showing itself, then the trader makes note of it, and then they start working towards a defined trade approach, a risk management process, a plan for entering a position that allows them the risk with which they are comfortable. So divergence might give them the comfort to start a position. It would then likely be a break of the downtrend, potentially at the 50-day moving average, that would then give confidence that that downtrend is now broken, and they would then look to add. So as always, trade management will have a huge part of whether or not the trader is comfortable entering on, absolute low and potential bearish divergence, or if they just say, you know what, I don't like bearish divergences, I don't like, or bullish divergences even, I don't like to buy at lows, I want to wait for the trend to shift, give me price action that validates new highs, new short-term higher high followed by a short-term higher low. That's the kind of thing that'll give a trend trader more confidence, and it may mean that a trader needs just to be patient, waiting for those things to develop. So just wanted to make sure we talked about that. I also wanted to peek at energy, which collectively still can't get out of this range. A week ago, we were thinking we might be getting out of it, but not yet. So banged our head on that same downtrend line and came back to the bottom uptrend line. So here we are, still in consolidation. This is going to break at some point in the near term here as we are reaching the apex of that trend. A couple other spaces moving aggressively today. So let's take a peek at industrials, which did get back into the channel here. It was above the channel for all of 2 to 3 days, kind of like financials was. Except that financials held the channel here and appears to be building a bull flag. So financials holding up quite well in this so-called pullback that we've seen in the broader markets. And in fact, that bull flag does kind of make pretty obvious development here in financials, short run at least. So great move to the upside over the last 2 weeks. And then for the last week, just holding the breakout spot and building that flag. Let's look at consumer discretionary. Can't believe what I'm still seeing out of this group. I mean, that is a new level. Now, admittedly, this does present as a bit of a potential head and shoulder top, right? You can see it with a left shoulder here and a right shoulder here, but these are all potentials, not by any stretch a guarantee to be achieved. And really, the optimism that we're seeing out of this space moving to an area that might be new short-term high, you know what? If we cleared this 1970, 1971 zone potentially, a lot of traders would tell you that right shoulder kind of gets negated, and they would be fine with what you're seeing here. And then further, there's a long way to go to what some traders would call the neckline of anything like that anyway, kind of a sloped neckline like so, perhaps. Or you could draw it maybe, back here like this as well. Regardless, the recent price action makes it seem like there's more opportunity for upside than it does for immediate downside, right? I think that's pretty evident by the move here off of the 50-day moving average. We've basically been above that now since November 26th. So discretionary holding in pretty well. Now, the positive we take from discretionary moving to the upside, semis getting back in gear, Russell in gear, NASDAQ popping, S&P popping, we want to see our defensives lagging, and we are. So here we have, let's get those moving averages back in. Here we've got the staples, ran itself into the 200-day moving average once more, everybody. That's what we're looking for, a failure again at the 200-day moving average. Now, why am I happy about staples not getting itself over the 200-day moving average? Well, this is again playing into the narrative. Where is money moving if we are taking it out of our high-flying, volatile tech stocks, semiconductors, AI play, etc.? Is it moving into areas of the market that are more stable and more comfortable in downturning markets? No, oddly enough. I mean, it has been for the last 6 weeks, but the fact that we've not broken trend is notable here. In fact, we do still have lower high, lower high, lower high, and below the 200-day moving average. So that still presents favorably for the broader market. The healthcare getting a little bit of a bounce, though, after that successful test of horizontal support. We talked about financials, little peek in on tech. Tech's going to look a lot like the NASDAQ. It's got a lot of work to do to get us back on true trend. unless maybe we're a longer term trader. And if we were to look back at the weekly chart on the tech sector here, take a look at this. Green 20-week moving average. We have been above it. We've tested it. Below it intra-week, below it intra-week, but we've been above it since the gap back here on May 12, the week of May 12. For a lot of traders, a close this week that holds the green line above the 20-week is going to give the belief, or at least the visual, that the trend that's been working is still in play. Now, that remains to be seen. We're only half an hour into the Thursday session. We've got 6.5 hours tomorrow. So for the next 12.5 hours, if we can maintain that rising 20-week moving average, we might see the continuation of the longer trend here. But as always, regardless, put yourself where you're most comfortable. If you're feeling like the analysis we're doing doesn't match up with expectations you have, put yourself where you are most comfortable so that you can manage risk, even if what you think is the next layer we fall to doesn't hold and we move through layers you don't think we can get to. I think it makes a lot of sense to position ourselves as though the market can move to a level we definitively do not want to see. If you put yourself in, if you're having those conversations with yourself about, hey, this is a level I don't want to visit, it's also a level that could very well happen. It is easier in advance to think about the action you might take if you get there. And I think that giving yourself the belief that while I don't want it to go here, I think it could fall to this level, that should give you the realization that there are steps to take to fix it in your portfolio. That is, if you fall through those levels, right? What steps are going to give you the comfort to ride the position longer? How long can you stay with a trade that's moving against you? The answer to that is different for each of us as traders, of course. But the true answer to that is often only seen when the position itself is dropping. And if you haven't given thought to any of that detail, any of that potential for weakness, my goodness, there is nothing worse than in the moment not having a clue where that price it might go and having a position that is far too big for your comfort. Man, that is just about the worst feeling I've come across. So this is why I speak about that process so much. So now we've had a lot of requests to double check on precious metals. So let's do that. Let's peek in on how about gold and silver. So here is the future price of gold rallying into the all-time highs and potentially ready to break. We don't know if it's going to pop through there. We do see that the RSI has moved into overbought conditions, but that's a lot lower than it was when it was back here. Now, in the past, we talked about the potential that a divergence does not necessarily carry as much weight when the RSI moves into overbought conditions. So perhaps this is less of a concern. The fact is that we are, looking at this. This is basically an ascending triangle into resistance at about 4,400. A break from here would be pretty healthy for gold. So keep an eye there. And then silver has already gotten away from some of us traders as it has just exploded. Now, why we talk all the time about why traders like breakouts. And, I hear from many a trader, why would I buy a stock that is breaking to new highs? Why would I want to own it as it breaks out rather than waiting for it to retreat? Well, unfortunately, we don't know if the retreat will ever come. In fact, after it made 3 days to the upside, it did pause, but that was a very brief pause, and the pullback was exceptionally light. I mean, it was basically 59.5 down to 57. Very limited in scope. Didn't give a whole lot back. And then built another flag. Bull flag here and went sideways for those 3 days and did the exact same thing to the upside yet again over the last two. So just a tremendously strong move of late. Now, we don't know if that's going to hold, but you can pay attention to maybe the 20-day, But if you're managing against the 20-day, you're giving up more than 10% to the downside to be proven right or wrong. That might be problematic for some. So maybe the 10-day makes more sense. And you'll notice the 10-day has been really solid in here since breaking out from 53. So that's pretty intriguing from just a standard view of technical analysis, I got to admit. So maybe keeping an eye on that. So we've talked oil, we've talked gold, we've talked silver. What about Bitcoin? So Bitcoin, bit under pressure here, right? So we notice I've drawn in a bear flag. Well, that bear flag did get violated, and it has been violated and maintained its bearish bias. So caution might be the word of the day relative to Bitcoin, at least as I zoom in on what's been going on. And, we talk about risk on, risk off. If you just looked at the maneuver it made to the low, this is off 37% peak to trough, if it holds, that is. But the concern for many short-term traders is now this action: 1 day, 2 day, 3 day, 4 below the 20-day moving average. So 4 consecutive right now below the 20-day, and a struggle to put yourself anything remotely above this line at about 89,450 to 500 or so. Interesting that it's just continuing to struggle there, right? Now, again, we could get back above it and it could hold, but you basically need to see it, right? So this is getting, I'm sure this is at a point of discomfort for a multitude of traders. If we changed our time frame to maybe hourly, you might be able to see this stuff a little more clearly, of course, in which case, yeah, this actually does look a little, let's do this. Quick teaching moment. I don't know if all of you are familiar with the draw functionality here, but when you've drawn in details on your chart that you want to hold in one time frame but not in another, this is how you might do it. So I've got my daily Bitcoin chart. I'm just going to go to my drawings, and I'm going to tell it to save a new draw set, and I'm just going to call this daily. All right. So this daily set is there for me, and I can access that at any moment. When I go into my intra periods now, like my hourly, I can clear the draw set. All of those lines go away, but back on my daily, they are still held. Okay. Now, if I wanted to add them back, I could do that by just going to my drawing set and selecting daily, and they get replaced. But on my daily bar chart, they're not getting removed at all. Okay, so here, if I just eliminate these drawings, now I can evaluate on the intra period for it exclusively. And really, who was it that called out a channel? Yeah, Chris B, you nailed it. Rangy and channeled in Bitcoin right in here, right? So maybe you're looking at something like this for a short-term price action view on Bitcoin. But I'll tell you what, that draw functionality, saving those lines and applying those lines in the windows you're looking for, makes a lot of sense. So I'm going to go ahead and save this one. Instead of daily, I'm going to call this my hourly. And so now I've got an hourly setup that is consistent on my chart. So this is how you can maybe make time frame discrepancies and alter your analysis a little bit, but still save that stuff. I like to save some old lines, old chart drawings and stuff, and just access them later on so I can go back and see if lines I had drawn historically have carried any weight for me as I go forward. So that's just another way to utilize Thinkorswim. I continually find new ideas in Thinkorswim every single day, if not certainly every single week, because this thing is just so robust in what it offers. The tools, the functionality, all of it just gets a little bit more intriguing for me every single day. Let's hit up some other stocks in the news this morning. So we heard from Micron on an overnight basis. They announced earnings after the bell. Stock has been well received, and the commentary rather well received. Notice that we bounced really well off that 50-day moving average. We've not yet made new highs. So certainly we've got an idea as to what we would like to see Micron doing. But Bank of America upgraded Micron to buy from neutral, put a target at 300. That's a big boost, by the way. Prior target was 250. So they've added a 20% premium to that. Again, no guarantee that a target like that is going to be achieved, but that's what Bank of America is stating. They are also stating that they're changing their view about the durability of the memory cycle and the quality of Micron's balance sheet. So they are raising their fiscal 2026, 27, and 28 pro forma earnings per share estimates by 62, 80, and 42% respectively over those 3 years. So as you can see, what they're talking about is an increase to expectation on Micron going forward. So they suggest that Micron is positioned for a potentially more sustainable upcycle than in prior cycles. That stands out. Another upgrade today is on GE Vernova. You all remember GEV because this one broke out aggressively a couple of weeks back. Now it has retreated. Shouldn't be surprised the level to which it retreated. It came back and tested the 20-day moving average with yesterday's lows. Jefferies upgraded it to buy from hold. A new target here at 815. That's up from 736. From where we are right now, 640, that'd be about 170 points to the upside if achieved, of course, no guarantee there. But that would also be another 20% premium from where we are right now. So pretty intriguing opportunity from Jefferies on that one. All right. And then I thought there was one I actually did this morning. One I talked about here was Rivian. Rivian got an upgrade today. So let's look at Rivian. Haven't looked at that one in a while, I'm sure. So Rivian so this is the 1-year chart. Looks like Rivian's moved through an area that had been important, but I do think that this one probably needs a little longer window of time because this thing has been in a healthy downtrend for longer than expected. So let's look at 2 years. Yeah, see, so there's a gap level up here, long range gap level, and then there's another ledge of resistance up around 24.5 as well. So those bear watching, but Rivian was upgraded. And the reason that I thought it was notable was this recent action in here, breaking through short-term resistance, and then this week, breaking through it, but testing it again, right? Remember, for a lot of traders with the breakout, they're not comfortable buying the breakout. Some of you are, and that's fine. How you choose to play the breakout, obviously, is part of your own plan and your process. But the throwback to the breakout level, once confirmed, is often the spot where a trader is going to have more confidence. And that's exactly what we got here. We were breakout. We had basically a false breakout here. And then we got all the way back to the 20-day. But notice that big tail once more. Intraday below the 20, but we closed above it. Many traders take that as optimistic or bullish. And sure enough, the very next day, we got a fantastic snapback. And granted, you can't anticipate that type of a snapback, but trading through the high of that low day, you got a good extended move to the upside. And now we're just going to probably monitor that 20-day moving average, perhaps in the short run, if you want to be bullish at least. Under the 20-day, things change, but Baird upgraded Rivian to outperform. They put a target here at 25. They raised their target from 14. So that is a big bump as well. They suggest that the 2026 year of the year of their R2 launch should boost Rivian's brand. It should boost their product demand and their shares as deliveries will begin near mid-year this upcoming year, 2026. So keep that in mind if you're considering Rivian. But again, an upgrade opportunity on the table today. Okay, everyone, I think that's going to do it. Let me just go back here. Oh, we did have a survey opportunity in the chat today, it looks like. So if you'd offer your insights, everybody, I always love hearing from you. You got some great comments yesterday following up with my discussion with Brent. So thank you all for offering those. I love hearing from you. If you take a minute to offer me those details, a score or comments, those come directly to me and I read every single one. So thank you so much. I did see the question about the draw details. Yeah. So just once more, when you've drawn on an individual chart, so you all know I've got my 4 periods, right? Daily chart, 5-minute chart, 1 hour, and weekly. Remember, you can default or define your drawing tools so that they are specific. So once you've drawn in, go into the drawing set, save as a new draw set, give it a name that's easy to recognize, and then when you look at your various time frames, you can apply those charts so that they fit the window that you're watching. All right. And of course, we're going to have this one reviewed and archived and placed into the archival for you very shortly. So if you need a revisit on that, just check in a little later today and you'll be able to rewatch this and go through those steps if need be. All right, big thanks to Barb Armstrong in the chat. Follow the 2 of us on X, Barb Armstrong CS, Kevin Horner CS, and make sure you're subscribed to the channel, everyone. Thanks for being here today. Have a great rest of your Thursday. I look forward to catching up with you all again real soon.